the third US bank failure within a week. Signature Bank has been shut down by New York regulators. Now, Signature Bank's failure follows Silicon Valley Bank's Friday shutdown and Silvergate Capital's Wednesday closure. Now, state regulators shut down the New York-based Signature Bank after customers were spooked by the sudden collapse of Silicon Valley Bank and withdrew over $10 billion in deposits. On Wednesday, Silvergate Capital, a key lender to the crypto industry, said it is winding down operations and liquidating its bank. This, of course, was following, the crypto exchange, FTX, and an overall meltdown in that. And, of course, global crypto markets also citing the reason for this closure. So, concern there led to this. However, on Friday, Silicon Valley Bank lender, is one of the biggest names really to the tech world and to startups, biggest lending name there, was one of the largest bank failures since the 2008 financial crisis. Now, remember, Silicon Valley Bank bought huge amounts of bonds over a year ago, like many other banks, and Silicon Valley Bank kept a small amount of the deposits on hand and invested the rest with the hope of earning a return on these. Now, with interest rates spiking, these bonds became less valuable and depositors were concerned. However, today, Silicon Valley Bank's new CEO has reassured clients that their money is safe. And startups here in India were also among those who were relieved that their company's deposits are safe and that they have access to them now. So, of course, this came as a relief, but market experts believe that for shareholders, really, this is the end of the road. Now, of course, to decode this and the impact of this, we have with us Mr. Saugata Bhattacharya, Executive Vice President at Axis Bank. So, do you believe this is really now a depositors versus shareholders scenario, where, of course, the concerns of depositors have eased, but for shareholders, experts believe it really is the end of the road?
Thank you, Sakshi. I think your predecessor, your panelist, and you have explained this so well. So obviously, in a bank resolution, in the resolution process of a bank failure, unlike in many cases in the 2008 global financial crisis, where equity investors were also saved in what is called a bailout of the banks, this time round, the U.S. Treasury Secretary, Janet Yellen, has made clear that there will not be a bailout, that equity investors will take a hit, and as well as potentially some of the potential unsecured debt holders. Now, but the question now remains, as as your predecessor also mentioned, about depositors. Now, the troika of the FDIC, the Fed, and the U.S. Treasury have assured that all deposits will be are safe and clear. But what is not clear at this point is the payout. Remember, for SVB Bank, about 93% of all the deposits were uninsured. Now, how the sequence of the payouts? So all of this will not be paid out upfront. I mean, so there will be some advance, and as the assets are sold, there will be other, but step by step in a graded fashion, these depositors will be paid out. That creates a cash flow problem. And that is what is spooking investors at many of the other banks that you are talking about. And that seems to be the problem. However, my own sense is, so other than the cash flow problem for the depositors, and I'm sure the U.S. is very concerned about it, they will take care of it. But other than that, depositors will obviously try to take out deposits from these smaller banks. That's where the policy response is likely to be useful.
Okay, and what do you have to say about shareholders, sir? Shareholders, of course, market experts saying now this is, of course, the end of the road for shareholders.
Yes, end of the road, meaning, I mean, they will take a large hit. So obviously now, the next step in the process, in the resolution process, is the sale of SVB and the other banks to new investors. So just like you saw that HSBC bought SVB's UK holdings for £1. And so similarly, now the search is on for new potential investors. Because remember, some of the assets that SVB Bank is holding is potentially quite valuable. The new ventures, the new technology firms, etc. So people will be on the big banks, etc. Will be on the lookout for purchasing if the price is correct. And that's what the key thing is. So if the resolution, the resolution people, the FDIC, say for instance, cannot get a number of investors in the process, then there will be a liquidation process. So again, I think that's the process now to be watching out for in as far as equity holders are concerned. That what kind of sale mechanisms can be established so that equity investors can at least get a significant part of their shareholding back in the system.
All right, like you mentioned, of course, that £1 buyout really of SVB Bank, UK really trending there as well. But of course, if I were to ask you the larger global implications of something like this, of course, third US bank closure within a week, your take on the larger global implications for the sector?
So, in the immediate aftermath, there will certainly be a risk-off environment where depositors will try to protect their deposits. Equity investors will and regulators will look for more signs. I mean, they will strengthen oversight, etc. The biggest implication of all of this is now how much do these central banks, the Federal Reserve, the ECB, the European Central Bank, and the other large central banks, how much do they reevaluate their focus on inflation now versus the signs of financial sector instability? These financial accidents that have begun to come about because of the very aggressive nature of the rate hikes that we have seen in the past. So that will be the biggest, the implication of the global economy, besides which there will be a reallocation of capital, etc. But my sense is that will not be a very material event. It's more the response of the central banks.
All right, and if I were to ask you for India, sir, a lot of experts saying, of course, the Indian banking sector is resilient and they can sort of overcome these storms. Your take on that?
I completely agree with these experts because I think, look, so the regional banks that you are seeing, and the regional banks in trouble in the US, are more akin to what we call as cooperative banks in India, who are relatively lesser regulated than all the scheduled commercial banks. My sense is the banking regulation in India banking regulation and supervision in India is far more advanced than the regulatory oversight. And remember, the Fed doesn't do the regulation. The FDIC does some of the larger, the mid-sized banks. It's these smaller regional banks that are the problem in India, and I don't think India is anywhere close to having those kinds of assets. So I don't think there will be an immediate impact on the banking sector.
All right. Thank you so much for sharing your thoughts, sir.